Hey, what is up, friends? So we are going to do a market analysis. It is June 29th. I'm going to look at 4 of my favorite assets for the week, which is going to be gold, EURUSD, silver, and SPX 500. We will do a top-down analysis from the higher time frames for swing traders and day traders. And this will give you a chance to see, as a 7-figure funded trader, how I go about doing my market analysis and planning trades for the week. So just follow along and you can practice yourself on other assets. It's relevant for every single asset. And the only other software I'm going to be using in this analysis is called the EdgeFinder, which is fundamental analysis software. So basically it takes all the economic reports for the asset and it gives it a bullish or bearish score depending on the most recent reports. If you want this, it's very useful. It just gives you another edge for your market bias. I will leave it in the link in the description of the video. Okay, so check that out if you're interested. All right, so let's look at gold here. Now, we hit an all-time high on gold back on April 22nd. And since then, we've been in this really insane range, choppy market conditions on the 4-hour chart here. And there's a few things that I'm going to look at. And the first one being is over the last week, it's just been selling off quite a bit. We have a lot of momentum, sell pressure to the downside here. So if we look at the daily, we can see that, overall it does still look very bullish, right? It's not like alarming. There's just been like a slight pullback from the all-time high. So with that being said, if you're a swing trader, we can go back to the 4-hour and we just want to like mark out potential key levels that I would consider demand zones. And one that I see here is this really obvious one where we had sell-off earlier in the year and then price ran up really strongly again. So if I mark that up, I'm just going to bring these tools up here. So mark this up here. And that zone is around 3138 on XAU USD. So basically that is a key level that you should really be looking at. And another thing we can do is I like to draw Fibonacci retracements off the previous strong move, which would be here to here. And now we can really start to see some high value key levels that we could be interested in trading out of. So looking at the EdgeFinder data here, something very interesting. So gold is currently a 7 bullish score. So anything above a 4 is considered bullish fundamentally. But if we go to top setup history and we look at gold, we can see that this is the last 30 days of data. So these are all the EdgeFinder scores day by day here. And the previous week we were at a 10, right? And then we had dropped down all the way to a 3, meaning the economic reports were not in favor of gold. And then we kind of jumped back up to a 6 and now we're at a 7. So relative to the previous week, it's weaker. And that kind of explains why gold has sold off this week and ran up the previous week, because gold selling off, it wasn't as strong fundamentally as it previously was, even though fundamentally it's still pretty strong, right? But that's how price action works. It's all about relevance and relative to the previous economic conditions and the previous price action on the week before, it is bearish, even though overall fundamentally it does seem still bullish. So because of those two factors, we can take advantage of the current sell-off into a nice key level to potentially set up a swing trade to go long. So what we want to look for here is areas that might be nice to go along. And look at this Fibonacci retracement right at the 618 here. This is beautiful because we have this level that has previously completely reversed the price in the past, right at the 618 Fibonacci level. So I'm just going to mark that up as well. And I'm going to consider that a very beautiful key level for trading out of. Okay, so we can do that, and that is around 32.48 or so. So a game plan for swing traders when we're looking at gold, we can do two things. We can wait for price to come all the way down to this level, which is, kind of difficult, takes a lot of patience, and by then price could be considered bearish if it makes it all the way down there. So a more attractive price to trade out of this week is the 32.48 to go long. So it looks something like this for a swing trader. I'd set it up right here, coming off that level. And for a stop loss for a swing trade on gold, we can use the average true range, which is the ATR. The 4-hour average true range can be a very good range for a stop loss on gold for a swing trade. So about a $20 move is kind of what we're looking at. You can go on a little bit of a higher end there, $24, $25. So let's just do that. Let's just do a $25 stop loss on gold here, just like that. And then for our risk to reward, well, we just want to target like a level that seems like it has a lot of liquidity. And the way you can tell where the liquidity previously was is like that's where the most price action is. People would think like this has the most liquidity because it reversed the price, but that's the exact opposite is true. The reason why it reversed so hard is because there wasn't enough liquidity. So price moved very strongly out of that zone. So I would target this area here for the TP. And let's see here what that brings us to. So we get a really nice 3-to-1 risk to reward. You know what? I would actually just set it below that other Fibonacci level right there. That's a perfect take profit range because we have a lot of potential resistance there, and we can exit the trade and just let it breathe after that. So that is what my swing trade setup would look like on gold for the week, coming into the week. And let's say if it just opens up super strong, doesn't even come down here, well, then we have to reevaluate where to enter. You know, it could do that, and we could potentially enter in on the previous exit zone. So you can always do that. Now for a day trade, what I like to look at is I like to look at the 1 hour momentum. Now, I know fundamentally the EdgeFinder score is a 7 here, right? It's a 7. If I go back to top setups, it's a 7, okay? But the issue with that is if I'm looking at the 1 hour chart, in terms of day trading, it's not as relevant because with day trading, you really want to go with current momentum. You're not in the market for very long, just like an hour or so. So taking a position-based type of trade isn't as effective economically, even though it can still help. But I really like going with the current 1 hour trend. And as we can see here, these two lines that I have on the chart, this is the 20 and the 9 EMAs. And what I like to do is I like to see the strength of the momentum on the 1 hour chart here. And that is the direction I'm looking to go with. Now, the thing is, what I'm going to do, because it's a day trade, I'll go down a lower time frame here. And I'm looking for a nice level to go short on. And the way I like to do that is just to kind of look at the momentum of the price. Currently, the same EMAs are crossed bullishly. So I would like to see price come up a little bit, like this, right? Come up a little bit, maybe consolidate, and then we get a break to the downside. And that break to the downside is going to cause these EMAs to cross over bearishly, and that's going to be a really nice indication to go short, because short I really like here because the momentum on the 1 hour is so bearish. And if we go short after it kind of breaks that consolidation structure, we can actually target this previous low here, right? So that is that's a nice place to target because it's still above this key level that we marked out for a demand zone. But, you know, it's aligning with this previous price action where there were a lot of buyers that stepped in. So that's the kind of setup I would look for. And for the stop loss, I really like the 1 hour ATR. So we go to the 1 hour chart, type in ATR again. The 1 hour ATR is around a $10 move. So that's a beautiful price to choose for a stop loss for gold. And look what happens here. Like price is above this wick. If I were to enter there, I just want to make sure price is above that wick. It's just another line of defense, right? So that would be my day trade setup on gold there. It would be like a 1.5 to 1, which is nice. Or you could trail it if you want. You could like set your stop loss to break even when you're halfway in the profit, and you can just keep trailing it. And sometimes you catch these beautiful long moves doing that. But I like to set it and forget it. That's kind of like, it just involves less time micromanaging the trade. But I always let it hit the TP. Okay, I'm not going to close it early unless there's news or market reset. So that is my analysis for gold, guys. So I would be looking to potentially short gold on the day trade for on price point of 32.73 for gold, and for a swing trade, for a swing trade, I really like that level we were talking about to go long down here, right at about 32.50, which is also a psychological level, which is which is great. So yeah, hope that helps for gold. Let's move on to EURUSD. EURUSD is very interesting because we can go over to the EdgeFinder and we can see that EURUSD is insanely bullish. It is at the top of the EdgeFinder board here. The economics for the euro are so much stronger than USD at the moment. And if we look at the top set, if we look at the history of EURUSD over the last 30 days, let's take a look at that. And let's see what it looks like first. So you can see here, we've been slowly gaining strength. At the beginning of the month, we were quite bearish, and we've been gaining momentum ever since. So let's see how that reflects on the price action on the daily candles. Okay, so as you can see, the price has just been, since the beginning of the month, price has just been running up so hard. Okay, so let me just clear these drawings, and I'm going to clear this. So what am I looking at here? Now, something very interesting to consider, guys, when you're looking for a swing trade, especially, look at historical price action. This isn't an all-time high, but it might as well be for like what has happened over the last year. We haven't hit this price point. We haven't been at this price level since 2021. Okay, so there's really not any relevant resistance here where I'm thinking, oh, sellers are just going to step in and drop this thing. The thing that's going to control this the most right now, because there's no recent historical resistance, is economics. And the economics, as we can see, have been looking great for the euro, right? So relative to the USD. So when I'm looking for a trade here, I'm just going to mark up this level here where we had some sellers step in temporarily, and then it just came back and break through. So what we can do is we can wait for a little pullback, right? And we can get a nice valuable entry to continue with this bullish momentum. And how that is going to look is I'll take a long position right here. And once again, we'll go to the 4-hour ATR, right? 4-hour ATR. We can see it's about, you can see this like a little red line here. It's about 40 pips on the aggressive side. So you go between 35 and 40 pips for your setup. So let's do that on the 4-hour chart here. It would be like that. And we go about 40 pips here, which is going to be down here. And it's going to look extreme, right? Because it is a swing trade. But that's just going to give us a lot of, is that right? Oh no, that's 400 pips. Sorry, guys. That makes sense, right? Okay. So let's just spread this out a little bit so it doesn't look so bad. Yeah, about 40 pips is going to be right there. And we can target, we could retarget that all-time high, right? For a nice 3-to-1-ish trade. Or what you can do is you can trail by 1R every time. So every time price goes 40 pips in your profit, move your stop loss 40 pips behind the price. And you can just do that until infinity, until it pulls back and hits your stop loss. That's a great way to swing trade. I really like swing trading in that sense. For a day trade, it's a little bit different. So we will look at the 1-hour chart, and I'm looking at this momentum here. Once again, these are the 9 and 20 EMAs, and we have so much bullish momentum. So I'm literally only looking for longs here. I'm not going to look for anything else. So if I go down to the 5-minute chart here, what I would like to see, I mean, this is a great buy signal in my opinion. We had sell-off, right? And we had a beautiful crossover. Buyers clearly back in control right here. So this would have been, with the PFK alpha strategy that we teach in the Discord, this is a perfect example of an entry signal to go long on EURUSD compared to all of the other top-down analysis that we've done. So what I would do coming into the week is I would kind of wait for that weekly candle to create that lower weekly candle wick, and then wait for some more bullish crossovers on these 9 and 20 EMAs to go long with that overall bullish momentum. So still waiting for a bit of a pullback, not as much as the swing trade, obviously, which is down here, but still lots of opportunity for day traders on EURUSD. And I like EURUSD too because it tends to trend a lot easier. I know this 5-minute price action looks insane, but it's actually quite nice for these types of strategies where you're trading bullish on these EMA crossovers when buyers start stepping in and pushing price up. Obviously it doesn't work every time, but that's just something to consider. So those are my two analysis. So I'm really interested in going long potentially on EURUSD, maybe 1.17. And then for the day trade setup, that high demand zone I'm looking to go long is around 1.15, 1.16. Okay, so that's EURUSD. Let's take a look at silver. Silver, I already did a bit of analysis. So this is really interesting on silver. So first of all, let's take a look at the EdgeFinder. Silver is bullish still, but if we look at the history, let's take a peek here. I think I can just type in silver. So silver's kind of been choppy all over the place with the EdgeFinder score. And when that's the case, I don't tend to rely on the EdgeFinder as much because it's just so sporadic. Nobody really knows what that means. The only thing that's relevant is, yes, overall, fundamentally, it is slightly bullish. So that's something to just keep in the back of the mind. It doesn't necessarily mean I'm only going to look for longs, but with that being said, if we look at the 1 hour chart, we just had such a hard run on silver here, and now it's finally been consolidating, right, after it hit this high point on silver. So what I like to do in this case is if it's ranging over and over again after hitting an all-time high, well, we can look for buying opportunities. Fundamentally, it still looks pretty solid, and that's where it kind of comes in. The fundamentals is like we can look for longs out of these very strong high value key levels, and look at this one on silver. Let me just close this here. We can see that we had just insane rejection from buyers every time price came in to this level. It would just reject over and over again. Very strong, dominant rejection candles there. So that would be a nice zone for a swing trader, in my opinion, to set up a buy order coming right out of that zone again. You can go down here, or you could go even a bit below if you want to be very conservative to see if it sweeps even lower. But you could get away with doing this little type of thing here, right in that zone. Wait for price to come out, and catch one of these rejection candles. If you have a buy limit order, that would be perfect, right? So as far as the stop loss goes for a swing trade on silver, let's take a look at the ATR once again. We can do around 30 cents, I think. 25 to 30 cents is kind of reasonable, I think. So how much is that there? Yeah, let's just say 25 cents is fine. Now, the only thing I don't like about this trade is this wick here is in the stop loss. So that's kind of like one of the situations where you have to think for yourself, like, okay, how aggressive do I want to be? Maybe I just take a bit of a smaller risk to reward, and I can set my stop loss at 40 cents just for a little bit of extra protection. Or you could do an entry that's lower down, right, and at a 25 cents. So these are the trades that you have to make sometimes when you're doing your analysis. Okay, so it's very important. And then for risk to reward, what we can do is we can really target these zones of maximum liquidity where the consolidation is, right? So that it's going to be like kind of like in this level where the most price action has been provided to buyers and sellers. So I would probably target like that level right there. And look, hey, there's like, I think that's a fair value gap. I don't know, but that's something to consider. And there you go. You have a nice potential, almost a 4-to-1 risk to reward trade with this type of entry model here on a swing trade. So that's something I would look for in the week. At the moment, I wouldn't try to sell silver just because for a swing trade, there's just no benefit to it, in my opinion. We're so bullish on the higher time frame. I think that's where retail traders get trapped, right? They think, oh, look, there's a head and there's actually a head and shoulders there. That's a pretty nice head and shoulders. Actually, it's perfect. Although I don't trade head and shoulders, that is a beautiful head and shoulders. We can see it without even looking at the chart. But now, that moves over. I would not want to trade into this supply zone going short because we don't know when buyers are going to step back in. Okay. As for a day trade, I'll go down to the 1 hour chart. Now, day trade is a bit of a different story. Okay, so we have current nice bearish momentum on silver. So what I would do is I would go down to the 5 minute again, and I would look for a until this goes back bullish. So this would be bullish, guys, when we have the 9 and 20 EMA clearly bullish, and then now the 9 and 20 EMA is clearly bearish on the 1 hour. So I go to the 5 minute chart. And what I'm looking for, we just had a bullish crossover, but I don't want to take longs. I'm only going to take shorts, right? This would have been a perfect short to take according to the top-down analysis. The 1 hour was bearish. Right here is exactly what I'm looking to do again. Okay, so this has just been a bullish crossover. So we want price to kind of, once again, come up a little bit, consolidate, break that structure, and start selling off. And once it starts selling off, that's gonna cross over again, signaling a nice bearish entry opportunity, and it would look something like this. And once again, I think for silver, we can look at the 1 hour ATR for silver. Oh, it's already pulled up. And about between 10, I would think between 10 and 15 cents is reasonable. I think 10 cents is more aggressive. You could go 15. So let's go back to the 1 hour. We could set that stop loss to, let's just do 15 cents just for the giggles, okay? Just for the safety. Now, that's fine. The only thing I don't like about that too is, our stop loss is well below this range here, but I think in this situation that's okay because I really want to target this demand zone that we had previously looked at. So we could get a nice, beautiful day trade at a 2-to-1 risk to reward, very clean on silver here. So that's what I'm looking for potentially if that's the price action. But of course, we have to wait for the week to kind of open up and price action to play out into the Asian session once the market opens. But that's my ideal situation right there. That's what I'm looking for. Okay, so let's look at the SPX last. We'll go right to the daily chart because this thing's ridiculous. This is why I wanted to look at it. Now, it's just going to the moon, right? Straight up to the moon last week. Boom. No sellers in sight. And the really interesting thing about this, guys, is that it broke the previous all-time high and it closed above it on a Friday. And if you don't understand the importance of that, it's because it signals that there's very little fear in the market. And the reason for that is because it closes bullish on a Friday. Anything could happen over the weekend. Some kind of war could break out, bad news over the weekend. There's no economic reports on the weekend. So that can't be an issue. So it's going to be some kind of dramatic event if something happens on the weekend that would cause the SPX to crash. There's very little fear. That is why there's no sellers relevant on a Friday before the market closed for the weekend. So once again, what we want to look for is this could be a really good opportunity to go long with all of this hype on a pullback. Now, I would go a little lower just because we had such a bullish candle here. This looks pretty, there's a few price points that looks pretty nice to me. And I think this point is pretty nice here as well. Just because we had a day there where there were buyers and sellers kind of unsure. So if we pull back to that area, that could be a nice, I don't know this thing. That could be a nice area to go long at a forced swing trade because you're getting a lot of good value on your entry relative to the previous price action, right? It's not a perfect bounce off this previous all-time high, but it's in the range of it. So that's around 6,100, which is also a nice psychological level. So 6,100 is exactly where I would look to do a swing trade. And I would set it up a little something like this. Long position here, long. And then once again, let's look at the 4-hour ATR just to kind of determine my stop loss level. Okay, so 4-hour ATR is around 20, let's say $25 is conservative. It's kind of the average, 25 to 30, which is interesting because 25 to 30 cents for silver. So we can do that. We could set a stop loss to $25 to $30. So let's see what that looks like here. Let's just say 30 looks good for me. And then, when you're breaking all-time highs, guys, I would just, honestly, trail the stop loss by 1 hour every time. So every time price goes $30 into your profit, move the stop loss $30 behind the market price, right? And then just trail it because this thing could just, who knows, right? This thing could just like run for the next month, like straight up like it did last week. We don't know. So you get a really good opportunity if you get a beautiful entry here. So that's SPX. And then let's just look at the fundamentals for the SPX real quick. And what's interesting is SPX is right here. It's neutral. It's at the bottom of my screen. See if I get down there. Yeah, right here. It's neutral. It's still a 4, which is slightly bullish, but it is neutral, which is interesting to me because it's so strong, like the last week. So the fact that that's a 4 on the economic rating scale for bullishness is surprising. So yeah, that's exactly what I look for. I probably wouldn't day trade this as it's hitting all-time highs. So I'm not even going to really look at that. But if I'm going to day trade, it's obviously going to be a long as well, right? But we haven't even had a crossover on the 1 hour since way down here. It's just been running straight up, right? So if we look at the 5 minute, we can see that we had a nice bullish crossover on the 5 minute here, which would have been a nice signal to go long, but that was on a Friday, so I'm not going to take a trade there. And the last bullish crossover we had was right here. So this would have been a really beautiful place to go long as well for a day trade. And like I said, when you're doing the day trade, just look at the 1 hour ATR, which is going to be around, conservatively, you could go with like a $15 move. So yeah, you could have set up on that crossover there, you could have set up a $15 move quite easily and just smash the TP with no problem, right? So that's a beautiful example of the PFK alpha strategy that we run in the Discord as well. So hopefully that helped. I will leave all my links below. We have a bunch of good content in the Discord. I have the VIP coming as well soon. That's going to just be incredibly valuable for day traders, prop firm traders, getting funded, making extra money with income. And I appreciate you guys stopping by. And if you have any questions, hit me up in the Discord. All right, peace.